This is the third video in part 3 of our financial education series. And the focus of part 3 has been around the basics of investing, right? So we are focusing on why we invest. We've talked about just some basic differences between stocks and bonds. We've talked about time horizon and how important time horizon is in the decision you make when you're choosing an investment, and especially given that the underlying investments are often stocks or bonds, and really what that means and why time horizon is so important to that. What I want to focus on here today is a little bit more on those underlying investments and some of the choices that most of us have to make when it comes to investing, but also talk about just how important automation is. Because we've talked about that, I think, in each part of this education series, but taking the day-to-day decision making off the table, taking the ability to make an emotional decision off the table is really important, and really gives you the best chance of being a successful investor. So, I mean, you want to be intentional with your investments. You want to go into those investments knowing what it is you're trying to achieve with it, knowing the time horizon, knowing the objective or the goal that you're trying to achieve. But then doing it in a way where you're not able to respond day to day is really important, right? Because it's easy to hurt yourself with that decision fatigue and with those emotional responses. Okay, so what I want to look at here is a quick a chart. And what this is the growth of a dollar over time if it was invested in the small cap segment of the US market. And so when I say small cap or when I say large cap, what I mean is small cap, if you were to take all the companies in the US market, the ones that are considered small cap have the least invested in them, right? So they have the least capital invested in them. And the large cap have the most capital. So Apple, for example, right? Apple Computers, there's a ton invested in Apple Computers. They are the largest large cap company. The small cap companies, on the other hand, might be like a small burger chain like Shake Shack, right? Something that has less invested in it. But if you look at this chart, you see what the growth of a dollar has done if it was invested in the small cap segment of the market or the large cap segment of the market, or long-term government bonds from 1926 to 2018, right? And if you updated this a few years, you'd see the fluctuation we saw with the pandemic, and you'd see the growth since then of each of these. But what you see here is that a dollar grew to much more, to $20,000 if it was invested in small cap stocks, $7,000 if it was invested in large cap stocks, and only $142 if it was invested in government bonds. Point is that you look at this and you think, well, geez, I want to be a small cap investor. That's what I want to buy an index fund or a mutual fund that just represents the small cap segment of the market, that the money's grown at that rate. But this goes back to why that time horizon piece is so important, right? If you look closer at this chart, if we look at the late 60s, right, or we look at the housing crisis in 2008, right, you can see here that if you don't have a long enough time horizon to get what has historically been the benefit of these market returns, right, the growth of that dollar invested in these broader market indexes, then you would not have been better off, right? I mean, if you were saving for to buy a house in 10 years and you started saving in the small cap segment of the market in 1966, you would not have been happy with what the value of your investment was in 1976, even if you would have been much more happy, later on, right? So it's that fluctuation, it's that risk, that volatility that makes the time horizon piece so important. It makes it so important that you're very clear up front and intentional about the objective you're trying to achieve, the goal you're trying to achieve, and the amount of time that you have to achieve it before making a decision on how you invest money in an account, right? And right here, we're looking at stocks and bonds, but you could see the same thing for the housing index. You could see a similar chart for all sorts of investments, right? Depending on the investment, you're going to see a different level of growth, a different level of volatility, right? The long-term bond investment might be the better investment for a shorter time horizon, right? But you can see how with more time horizon, there's an ability to take on more risk with with these other segments of the market. Okay, so just wanted to circle back on that for the time horizon piece of it. And then also to just look at this, to think about how you would begin to invest your accounts. The second thing I want to talk about in this video is the automation piece of it, right? And like I said, we've talked about this in other videos, but the automation piece is really important. And I stress it because it's gotten so much easier than it used to be. Most of us can set up direct deposit from our, when we have a paycheck, right? We can ask our employers to set up direct deposit so that money gets directed to a specific account, right? And within that account, maybe it's an investment account, you can actually direct what goes into that account to get invested. So once you know that you have room in your cash flow to save, and you have an objective to do something that you want to invest for, and so you can save for that objective and you can invest for that objective, then the most important thing you can do is automate that, right? So even if it's $20 a month, directing it to a specific account that is then getting invested in the way that makes the most sense in light of the investment is crucial. And it's something that that those that do it are that much more successful as an investor in achieving the financial objectives and goals than those that don't. Okay, I know many of you likely have questions about specific investments and how you should invest in your situation. I encourage you to please, reach out to me if you want to discuss that in more detail, and we can talk about some of those specifics. The reason I can't speak to it here is it's so dependent on your objective. Whether it makes sense to have a rental property or whether it makes sense to invest in XYZ stock or a mutual fund in your 401k, all that depends on your objectives and goals, your time horizon, what you're trying to achieve. And it's so important that you tie investments to those concepts, right? To your objectives and goals and your time horizon.